Rates went up again. What do you think about that? Hey, it's Roberto Palacio, mortgage broker with Bespoke Mortgage Group. So the Bank of Canada raised rates again, another 0.25%, bringing it now up to 4.75% overnight lending rate. So this is going to mean all of our loans go up. If it's a credit card, credit line, if you have a variable rate mortgage, you'll be seeing your payments go up for sure. But the cost of goods overall are going to be going up with this as well. Businesses have loans they pay, and of course, if the interest they're paying goes up, they just pass on the expense to us. So in a way, this doesn't make sense that as an inflation fighting tool right now, at least this particular decision, it comes off more as a warning shot. Like give the perception that we need to slow down spending right now. I believe the Bank of Canada, wasn't too impressed or maybe surprised, let's say, that the housing market stabilized as much as it has, um, given the spring market being far more robust than we expected. And the idea, I think, with them raising the rates is really just a signal that if we don't spend less money, then they'll keep on doing that. Of course, this rate really won't have effect directly in the economy. What you're seeing, anything right now, as far as inflation going down or slow down in the economy, which it really hasn't, is really because of due to rate increases of last year. So it's really interesting that we've had the Bank of Canada do this increase. To me, it's really that slap in the hand movement. And right now, there's a huge perception that they are giving us this warning, and they'll do it again if they have to, sort of like a overbearing mother or father on a young child. So interesting enough, though, I think it's time to realize your personal economics and all this is what needs to be considered. Variable rates are clearly going to stay higher for longer, making fixed options a lot more viable for a lot of people. I believe we'll be seeing a lot more people moving into short term, either 3 years, uh, even upwards to 5 year fixed terms to try to get more stability in their life, as variable rate borrowers are brunting most of this pain from the increases. Of course, if you have a renewal coming up, expect rates to be much higher than it was 3 or 5 years ago, whenever you did your mortgage last. Great time to consider cash flow planning as well, because at this point, why not? If you're in need of to figuring out how to get more life out of the money you're bringing in, this is a great time to take me up on the opportunity to do a cash flow plan for you. Another thing to consider, if you are someone that are in the market, reach out. Let's get a rate hold for you. What we've been doing in the last 6 months is just gauging how rates have changed, gone up and down. We've, locked in rates and seen rates come down for a short period of time, got new rate holds. So we're constantly eyeing out what's best for the client as they are on their house journey. Even if you have something locked in for renewal right now, we've been doing our best to stay on top of market rate movements with the lenders, and re-engaging them to make sure the rates, as they come down, that our clients are getting them at a lower rate. So it's been an interesting time, a lot of movement. I tell clients, like, usually the mortgage market is kind of boring. See possibly a few movements here and there, nothing overly sharp, and suddenly we have a lot of movements going up and down quite a bit. So this is a bit of an update for you guys. I always appreciate any feedback. Feel free to comment or reply back any thoughts, and reach out if you think you need some help.